All right, good morning, everyone. Thanks for making it here. Got a busy day. Hopefully everyone was able to take part in the keynote earlier. Some great discussion there, and much more to be had across the rest of the day. My name's David Roldán. I'm AWS Head of Startup Business Development for Europe, Middle East, and Africa. Today we're going to have a panel discussion talking about go-to-market. When you think about the rise of B2B SaaS companies, they estimate that there's probably over 100,000 ISVs, independent software vendors, out there. Within the next 5 to 7 years, they estimate there's going to be over 1 million of those companies that exist. So it just goes to show that there's so much yet to be built, and I think today we have a very unique opportunity to talk to some people that are investing in the space, have been operators themselves, or still operating and building some companies that are really helping to shape and define of what's to come. So without further ado, I'll have a short introduction with the rest of the group. First, Konstantin.
I'm CTO and co-founder of Planradar. We are a software as a service delivering to the construction industry. We are on the market for about 10 years, about 450 people, and operating in like 26 countries by now.
Jasper.
Yeah, Jasper. Hi, I'm a partner at Cherry Ventures in Berlin. We have also an office in London and in Stockholm. We invest out of a 300 million fund, so it's early seed stage. It's our fourth fund, and I think what's relevant, we are all operators or founders, so we try to be very close to founders, put founders first, but we like to take early risks.
Gloria.
Hey, I'm Gloria. I'm based here in Berlin, and I just launched my own solo GP fund called Beyond Capital, which focuses on investing in B2B SaaS companies across Europe. I previously was a professional VC invested in Next Ventures, then went over to the operational side, and basically helped an HR tech scale from like 5 employees to about 25 employees, to then a sale to Postonio, and led some of the go-to-market functions there. And then in the meantime was an angel investor in different B2B SaaS companies, such as Pigment, for example, in France, or a company called Adler in Sweden.
Yeah. All right. So, when it comes to go-to-market, maybe even if we take a step back and we think about product market fit, something all startups are talking about. And if product market fit is the goal, if you will, then go to market is almost like how you get there. And in many cases, go to market has kind of been the new economy word for like price, product, place, etc. So maybe start with you, Gloria. When you think about kind of tapping into that operator side, and then kind of how you see things as an investor, what does that look like for you, and how's that evolved since your time going into full-time investing?
So I was an investor before, and I was on the boards of companies such as like Cultureamp or Colibra, etc. And when I worked with these companies and they were like 20, 30, 40 million in ARR, I was always like, why are you not getting your go-to-market in order? How hard can this be, etc. And then you go over to the operational side, and then all of a sudden you realize, oh, I don't really have the data. So like literally, you're really struggling to get like a CRM in order, especially over time. Like the quality of the data in the CRM is really difficult. You don't really understand like your sales cycles. In a lot of cases, maybe you're looking at conversion. So you understand, okay, this is how many people that are like signing up for the newsletter. This is how many people I'm touching, etc. But no one is really looking into the level deeper into understanding how long does it actually convert. Take to convert from stage A to stage B to stage C. So that was quite interesting for me to see once I was on the operational side, that it's so important to build like the fundamental data structure underlying and really think about, okay, how do I structure my go-to-market? What are the channels that I want to tackle? Is it partnership? Is it marketing? Is it outbound sales, etc.? And then really think through what are the touch points that I have with my customers? Who is talking to those customers? What do we want to try to find out at that stage? Like, how are we qualifying? So in a lot of cases, for example, I've seen marketing like send over marketing qualified leads to sales, sales never picking up those marketing qualified leads because because they don't trust the marketing qualified leads, and then they still do outbound. So really understanding like your sales process, mapping it out, and then setting up your CRM in a way that reflects that. So for example, if you are very outbound driven, maybe you shouldn't use HubSpot as a CRM. If you are very marketing driven, maybe you shouldn't use Pipedrive because Pipedrive is a hunting tool. And like understanding that and getting that in order, probably just before Series A, not too early, but just before Series A, helps you so much to scale after you've really hit product market fit in your scaling. And that's something that I thought about as an investor, but then when you are an operator, you all of a sudden realize the implications of it.
Yeah, and I guess Konstantin, when you hear that and you think about some of your own experiences.
It's definitely true. So I mean, it makes a lot of sense to invest in your tooling and in your setup. Basically, and you can leverage the time quite good, because while like the product team is like building the product and listening to the first feedback of the first users, other parts of the company need to prepare all those processes like the CRM, the communication between sales and marketing and getting on the data. But I think the product market fit itself, you need to find in the product with the customers, and by trying out, getting feedback and going out, in my opinion, as early as possible, even if you have a product that is not fulfilling everything that you personally as a founder dream of, or that the customers maybe in the first meetings tell that they want, but you need to go out and then iteratively refine it, in my opinion.
And Jasper, obviously you have an interesting vantage point, having invested in dozens upon dozens of companies. Any commonalities you've seen of maybe some of those kind of pitfalls, and also some of the things that maybe people have had success with?
Yeah. Maybe to point out, so I agree with Gloria, it's not that, and also obviously Konstantin, but it's not that easy answer. It's a very practical thing at the end of the day, and my background is a bit different. So I was BCG, and then I decided to become a founder. So I wasn't as analytical. I was bootstrapping, so I was really just trying to sell the product and understanding what the customers wanted. And then becoming a VC, I was trying to make this whole thing a bit more rational and numbers driven and trying to analyze things, although we do very early stage. And I would say that the main takeaway is there is no common KPI. It's really hard to rationalize what is the product market fit. I like to say it's better to talk about a product segment fit, because you will always have a very strong fit to a certain customer group, certain segment. They really love you. And then the big question is, what do I have to build to go into other segments to make it easier? But usually if you have a very strong fit here, you might not have a strong fit in a different segment, and then you might have to work on your brand and brute force things a bit more. We're coming to that later. But I think the commonalities are that a founder sees everything. I was a single founder, and you get this feeling of, okay, it's really working well. And it's about speed, it's about customers pushing you. It's a feeling at the end of the day, not really a KPI. And then you kind of double down on that feeling, and that's the commonality we see with those companies. Every company that is over-rationalizing, that is trying to build structures, implement Salesforce, nothing against Salesforce, but way too early in seed stage or something like that, you can't solve that, right? You have to be out in the field, you have to talk to the customers, listen to them, then find commonalities among the customers, and at the end, the velocity in the sales pipeline moves faster. They love the product. It's an NPS score. Maybe it's a CSAT. I don't know. But it's really the feedback that they have. And that's the important part, finding the product segment fit. And by the way, go-to-market helps with that, because at the end of the day, you have to talk to the customers. So you have to find a very efficient way to talk to a lot of customers. That's the commonality.
Yeah, and I think the key point for everyone is that there is no silver bullet. It's going to be and remain an iterative process. But when you think about some of that kind of friction, and even with like some of the internal teams, because it's always going to be a little bit of that push and pull, product versus commercial versus technical. Konstantin, how have you seen that as an operator yourself?
So yeah, I mean, it's when you are in the product side or in the tech side of things, especially in the beginning, then you are very often overwhelmed. Sales team is coming. We need that feature. We need this. We need that for closing this deal. Then marketing team is coming. Yeah, we need a better integration with the CRM and the marketing tools and everything. But in the end, you usually in the beginning have a very small team, and you're permanently thinking, do we do this? Do we do that? What is more important? Different opinions. And when you're in this situation, I think it's important that the founding team in the beginning is like really aligned. So we have a large founding team. We have 5 founders from very different roles, from commercial side, industry side, in our case, construction, real estate industry, and tech. And then as long as you are with them on one line, you will do the right decision. But it's permanently, everything is, let's say like that, one thing is always falling short. You can't do it all in the beginning.
And one thing, maybe a little bit controversial, especially in Germany, I would say don't hire a product owner or product manager too early in your journey. And don't give away product roadmap decisions to that person. It needs to be owned by the founding team, at least past Series A, if not longer.
We did it exactly past Series A.
Yeah. So I would
let's
highly
pull on
recommend
that thread a little bit more.
Okay.
To give
So I would highly recommend hiring basically product engineers very, very early on as your first hires that ideally would otherwise start their own companies or want to start their own companies one day. And basically want to see the 0 to 1 journey from within before they're starting to go out and start their own companies. And so basically the engineers need to think through what are the interdependencies with the other pieces, what are the interdependencies with the customers. They need to sit on customer calls. They need to do the user research themselves, all of that. And then you sit together once a week, once every 2 weeks, depending a little bit on the company size, and you're prioritizing the roadmap together with the founders. I personally am not a big fan of all these like product managers, which are basically glorified consultants or project managers. If you want that kind of person, hire a founder's associate that's basically gonna sit next to you, does all like the small little stuff with the founder that's responsible for product, but do not hire product owner or product manager because they are typically they don't really have the vision that you have. It's very, very rare that you can properly communicate that to that person. And so they take it in a different direction that you would probably do it. And at the beginning, you can't quite see it because it's like slightly different. Long term, it makes a huge difference. And that person is always biased. It always depends on like who they like within the team, and then they are gonna give into that feature request of that salesperson maybe because they like that salesperson more than the other one, and they don't always have like the big picture, the company in mind as much as a founder would do that.
I like that, and it's the same for sales. At the end of the day, at the early stage, when you look for your product segment or product market fit, you are building, and building means you're doing experiments, you have hypotheses with your customers, you're looking for the right segment, but you fail. So there's a lot of failure. And then when you're feeling good as a founder, you come into the scaling phase, and that's different. That's repeatability, scalability, that's structures, processes. That's a different, as you elaborated, that's a different type of personality. That's someone who likes predictability, who actually can tell you what happens in the next 3 months in sales. But you don't want that at early stage because you might, and that's this premature scaling, you might scale in the wrong segment with the wrong product, right? So it's very hard to find those people. I agree with you. It's the kind of people that will leave your company eventually as soon as you're scaling, because then it becomes very boring for product. And giving to your point, all these interactions, people will say, yes, but let's innovate, let's do more experiments. And no. We have to deliver on the revenues. So people might leave you then, which is okay.
And for those that are trying to navigate the balance between what is that tipping point of hiring like a product owner, what would you say that is then?
My feeling is, what we see in the companies, it's when it's too much of a chaos, when it's really come to the point where the feedback loop between all the different departments becomes too slow, too chaotic, missing things, because they can really manage communication well. The best product managers I've seen, they're very strong communicators.
typically it's when you expand into a second product,
Yeah.
I would say. So if you are a single product company and it's fairly narrow feature set, the founders usually can manage themselves because it's not as complex yet.
Yeah.
The minute you have like 2 different products or 2 different use cases, or you expand to the US, for example, which is also a big step, then typically it gets too complicated, and then you need someone that's like managing the day-to-day, and you are only involved in like the bigger decisions as a founder.
I mean, we did it. We built up the product team, as said, only post Series A. So like the product management team called because we needed. So basically, because the organization around the product team was growing so much salespeople, so much stakeholder, customers think that it was just like it's a matter of workload that cannot be done. And also we found in the founding team for myself that it's not really what I like in sitting the whole day in discussions with sales or with marketing or whatever. So it's good to have, but where I fully agree, it's extremely hard to find good people. We found one, an ex-founder himself, that we searched for nearly 1 year to get someone that we were satisfied with. It's to like not have a glorified product manager, but having someone that understands, that drives, and helps a lot. It's on the other hand, I'm not so sure if I would do it again if I would not have hired the person a bit earlier than we did, because we were in the founding team sitting very long, very tight on the product. I'm after seeing it from now in the back, I'm not sure if it was always the right decision. It was good, we were successful with it, but retrospectively, I don't know, maybe it was a little bit too late. But who knows,
But I suppose that's part of the challenge in the science is trying to identify when is the right time to pull the trigger, make that decision. But I think kind of to summarize on this point, that kind of going too early has some peril to it, and it's much more about stay focused on product, which kind of brings me to kind of another point that kind of around this topic, which is, so many times I've heard founders talk about, well, if I just build that one killer feature, and that's really going to make this difference. But oftentimes, what you find is that's almost like replacing of like, actually, we just got to focus on user experience and product. I guess, Gloria, have you seen that kind of manifest itself with some of your own experiences?
It always feels like product market fit is one feature away. Like constantly, it always constantly feels like, okay, if I get this, I should get product market fit. If I get this, no, not really working. So I think it's one of the things I've seen founders do wrong is, for example, raise too little capital early on, and then they're thinking in feature, and they're not thinking in terms of like use cases and what's in solution to that use case, because they're iterating. They're iterating too quickly in terms of fundraising. So meaning, I'm a huge fan of iteration in terms of like shipping something, sending it to the customer, having them try it out, getting their feedback, scrapping it or doubling down on it, etc. It gets very, 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 very tricky if you have to factor in fundraising in between. Because what you end up doing is you're over-optimizing on short-term KPIs and short-term success. I want to close this customer, and for that customer, and in order to raise the next round, and for that customer, I need this feature. And you're basically not building for your long-term product vision and long-term, at least product strategy. Building for product vision is a bit tricky, but at least building the product strategy. And you end up basically ticking off features in a Jira board, rather than thinking about, okay, what's actually the problem, and like what's the bigger solution that we need to give to the customer. So one of the things I'm recommending a lot is raise a little bit more, compromise on the dilution if necessary. Don't go too high, so don't go above 25% per round for sure in terms of dilution, but don't go for like 12% dilution rounds, for example, because it does something with your mindset, and you end up thinking in very incremental steps, and developing in very incremental, like in features by feature, rather than seeing the bigger picture. So that's definitely something I've seen work better in my portfolio.
Yeah. Jasper, your thoughts on that?
I think there are three things to bear in mind. One, as you mentioned, the product vision. So you can take very strong visionary decisions. Let's take Databricks deciding on Apache Spark versus Cloudera. And you can do those things, and they are big bets, and you probably should not deviate much from them. But that's kind of a founder decision. But then what really helped my teams was to focus on actually KPIs. One is you have conversion rates and you have retention rates. And depending on a bit on the stage of your company, when it comes to product, the question is, do I need more customers for feedback as an example? And what would increase the conversion rate? And usually that's a bit the wow moments, the time to value. So how can I create more moments where in a demo a customer really says, yay, this is what I was looking for? And time to value, so getting faster implementation, faster feedback. And then the other one is, do I really need retention right now? So do I want to keep them? Is that a promise? Or do I rather, compromise on that? And actually, by the way, splitting the product team between retention and conversion is not too bad. At least it helps some teams. But maybe coming back to that, at the end of the day, the customer's right. So we've seen the best killer features happening when somebody or when sales had these workshops with product and others and say, if we really get this feature, I have 10 customers, they told me exactly that. So it's very anecdotal in a way, but then it would help. And by the way, it was the same for my startup. I was a single founder. My engineers hated me for that, but I really said, if we get this one feature, I think I can sell more of this. But that's, again, it's a discussion.
That might be a good segue into customer success, because you talked about retention. And success has been a term that has been widely used, means a lot of things to a lot of different people. But I suppose when you think about kind of new logo versus retention and kind of the retention metrics, Konstantin, how have you and the team been thinking about that?
Also I would say I find it interesting to hear from VC side that you can skip on retention. It's not from the rounds we have raised that I know that retention is king. So
it sounded a bit divisive.
Surprisingly to hear that is the first time in my career hearing that someone is. I think retention is king, and for especially in we in B2B SaaS, I think it's very important. And to go over that, yes, we with the customer success a bit is also something we only started to professionalize, let's say after Series A. We had before mixing these up, I would say, in product support and sales that were both responsible, and have now diversified out a complete customer success team, where we would make sure from the beginning it needs to be data-driven. So first the segmentation from the business in the classical gold, silver, bronze customers, and then really based on usage data, metrics, etc. This is where we invest because your customer success resources will always be scarce. If you have a couple of thousand of customers, you really need to choose where to put the power on, and that is it's a data decision. So when you are in that, when you go with that, and it also costs a lot, to have a team like that, then I think you need to be really numbers driven.
Yeah, kind of on that point, Gloria, how have you kind of used the data to make some impact in decisions?
So I think retention is not important until kind of you have the first 10, 15 customer. And actually churning customers sometimes is good because it means that you have an opinionated product that not everyone agrees with. And that typically helps you to get to product market fit more quickly because you're building a product that some people really love, other people hate, and then churn is fine. Once you've hit product market fit, net retention was my number one. I mostly did growth stage investing, Series B, beyond, etc. It was my number one metric, number one by far, because it tells you something about how much people love the product. And PF surveys are great, but like they're voting with their feet, they're voting with the money, and so that's much more important than like whether they say like, oh yeah, I would really miss this product if I couldn't use it anymore. Doesn't really pay the bill at the end of the month. And so for me though, I would always cluster customer success into two pieces. Three pieces. One is activation. I think a lot of people are not focusing a lot of the time on onboarding and activating the customer and making them successful. They feel like, oh, I signed a customer. Oh, great, I've been successful. No. Sometimes, like when I look at companies, it takes them like 3, 4, 5, 6 months, and from like contract signed to contract live. Like even if you're getting paid, which is not always the case when you sign a contract, I don't care if you have that contract signed if that customer is not live and it's not engaging with the product. So it's really important that they're actually successful, that they see ROI really quickly, that they're using the product. Then I would look into, okay, how are they using the product? Are they engaged in the product? So in a lot of cases, you are selling annual contracts. Most SaaS businesses I worked with are selling annual contracts. So churn up until Series B or so doesn't tell you a lot, because you always see the problems way too late because they're still stuck in the annual contracts, or a lot of them. And so I'm basically looking into engagement, and I'm looking into like who's actually using this product. Is it a monthly active? Are they monthly active, the users? Are they weekly actives? Are they daily actives? How sticky is it? So I would really think about, if I was a customer success person or think about customer success, I was really looking to like engagement and like which features are being used, etc., and trying to understand why is that the case, how can I entice them to like use it more. And then the third piece is really then the renewal. How am I having those conversations? Like how am I maybe pushing in price increases, etc. And for that case, I'm a huge fan of modularizing the product over time, so that you basically have something to upsell, maybe within the year, but at least at the end of the year. So think about it, if you have a one fixed contract and that's all they can buy, and maybe there's a user-based pricing, it's very, very difficult to get to a very good net retention rate, because some people will churn. Price increases are a little bit tricky, and VCs can distinguish between, okay, what's the net retention? Is it because of price increases, or is it because someone is really extending the contract, expanding the contract? So what I like the most is when they are able to like go in with a small product and then cross-sell other products. Especially, you don't really have that in seed, but especially from like maybe late A, Series B, kind of modularizing the product and then being able to cross-sell is really what I would focus on more and more as a customer success team.
Yeah, I've led customer success organizations in the past, and that part around onboarding, absolutely true. In fact, I remember once we had done a survey with customers, and the number one reason they said they churned was poor onboarding experience. It just kind of set the tone.
Maybe three things to add. You're still a small company as a startup, so I agree you don't want much churn, but if you don't win customer acquisition in an efficient way, you're still a small startup with an amazing retention, but it doesn't really help, right? So, so all the experience, and that's why I said prioritizing. The second one is also to Gloria's point, you don't get the pricing right at the beginning, because you're still working on product segment fit. So thinking about what Gloria said is right, but don't overcomplicate pricing and everything. It's really about conversion rate, getting more customers and feedback. And then the last one, we always see those comparisons where, hey, 120% net dollar retention, 130, because that's what you see with IPO'd companies. Yes, those are IPO'd companies. They grow slower, they are much larger. The startups I invested in, many of them have more than 200% net dollar retention, and that's actually something you should really think about. Could be usage-based pricing, could be, but you are expanding your product all the time, right? You want more value from your customers, so aim for higher net dollar retention rates.
On the pricing, the only thing I would say is, yes, you're not going to get it right. It's going to change 5,000 different times, but understanding as a founder, like what's the ROI I'm driving? And what does it mean for like roughly how much I can charge today and maybe in a year's time is important because it will inform the type of go-to-market that is the right fit for you. Meaning, I see a lot of companies that tell me, oh, we want to do outbound sales. And then I'm like, okay, what's your ACV? What's your average contract value right now? And it's like 5K. I'm like, huh? Like, it's just, I've seen very few companies, Doctolib is probably the best examples of it, where like they can get to ACVs of sub 5K and still make sales work, like outbound sales work. It usually does not work. So that's the only thing in terms of like pricing, where I would be like, okay, what are the competitors charging? Or like, what can I charge? What's the ROI? Get an idea quickly. Whether it's 10K, 15K, 20K, no one cares. But is it like 15K or is it 50K or 100K? And then like trying to figure out a type of go-to-market that fits that ACV, so that long term, with like a couple of levers, you can make unit economics work once you have product market fit. I think you should probably start with not in year one of the company, but maybe towards end of year 2 or so. Yep. I would definitely start getting a little bit more sophisticated around pricing, knowing though that it will be wrong and that I will need to change it a couple of times, but at least starting to think about it.
But it's okay to start with outbound sales because you get more feedback from the customer. But to Gloria's point, I mean, at least that's what we would ask the founders all the time. If you are at the 5K, so how will you build a marketing machine more inbound driven? But it's okay to start with outbound. Yeah.
I also have, we very much, again, I have to say, depends on the industry you are delivering to. Our industry, very old-fashioned. You need outbound sales. There's no way around. You can ditch as much money as you want in marketing. You will not reach those persons. Yes, you get. So we found out like over the size that we are, by getting a bit back on like generating large volume of leads not necessary to less revenue, because we take outbound, we go to trade shows, etc. So it's a very classical approach. So I think when you're in B2B SaaS, depending on your industry, outbound, I think you need it from day one. My experience. And one thing I wanted to add to the onboarding with customer success, that links to pricing. We found out our customers, they will pay for the onboarding. Yeah. So you need to offer them, and they have no issue with paying money for someone that is like doing an onboarding, setting up their account. So we do it. It's very easy. It's like we for a long time did not do it. You know, when you start like an internet-based SaaS, you think, yeah, you build the product, they will come, swipe the credit card. But yeah, reality is very different. So it makes a lot of sense to use customer success for all, and you can charge for it.
Funnily enough, I think it's very common in continental Europe, very tricky in the US. Like for the same customer size. So it's easier also for enterprise customers than it is to SMBs usually, so you have that. But then also Germans think more in CapEx or one-offs. And they think, they don't like high monthly fees as much. So I've also seen definitely in Germany, it's a lot easier to charge for onboarding than it is, for example, with US customers.
I mean, it doesn't need to be a high number, you know. It's not like something that is your revenue driver, but at least, I mean, it's you get it, and also, I mean, it has also some, let's say, like psychological effect. The customer will more listen, will be more engaged because they pay, and even if it's just symbolic, you know, it is. I said this is not here to make the revenue, but you get the customers more into it, and they see more value. It's unfortunate, it's this old thing, everything that's for free doesn't see so much value, you know.
Yeah, but I think in many respects you're talking about kind of almost de-risking things to increase the probability of success of your certain tribe, if you will. Those people that are going to be your core users, and ultimately ones that you hope are going to tell others about your product. And because a lot of what we're talking about is ultimately remaining focused on the product. So I think maybe kind of pulling on that a little, when you think about, say, like product-led growth versus go-to-market strategy. I know before we had some really good discussions about this. So yeah, maybe Jasper.
Oh no. Okay, so. Yeah, at the end of the day, I mean, we were discussing it. What is product-led growth? So if you decouple it and you ask people for examples, you hear like Slack, you might even hear Figma nowadays. So the question is it just an inherent virality in the product? So the product with kind of network effects gets just better and better when more people are using it and you charge for it? Or with Figma, you just share it and everybody sees it, or I think Pitch is also doing the same. So is that what you're doing? Or is it actually, we spoke about net dollar retention or expansion of the product. Is it that someone uses it in the company, I think open source is another example, and then promotes it to others saying, hey, this is amazing, we should all use it, or you have to use it because else I can't really use it. So the main question is, do you really need that? Or is it basically the fact that you want to wedge into the company, land and expand, and then you do outbound sales, you do customer success, and then you push it with customer success into the company. That's not product-led growth. And we rarely see cases of product-led growth, and I think Gloria has a very good opinion on why is it tough. I think.
Yes. So it's quite interesting when you talk to founders about product-led growth or how they go-to-market strategy, and like product-led growth sounds really fancy, and it sounds very cheap as well, because you're not paying for anything. The problem is, in a lot of cases, your end customers, like your ICP or your persona, one of the two, is never going to adopt the software just on their own. So for example, like, I don't know, a chief procurement officer is not going to just like do their own research online and sign up for a product and use it to like onboard their suppliers. Just never going to happen. You need to go through a procurement process, go through security, go through all of that. That is not product-led growth anymore, because you have multiple touch points with multiple people, security, IT, like everyone. It's not product-led growth. So if you were telling me you're selling a procurement product and it's a product-led growth, I'm like, have you even talked to anyone? Have you even like tried to sell it? It's not going to work. Yeah. And so that's step one, where I think certain personas, certain ICPs are not great for product-led growth. For product-led growth in the sense of like, the notions of this world where it's just out there and everyone is signing up with their credit cards, if that's product-led growth. Yeah. And then the second problem I think in Europe that we've got is we just do not have the talent. There are not a lot of people who successfully led a product-led growth strategy at a startup. So like in the US, I can go to I have tons of people at Notion or whatever that at least know the best practices. In Europe, those people are very, 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 very rare. So even if I want to do it, the people that I'm hiring, maybe they've done like marketing at a B2C company, but they've never successfully led product-led growth at an Airtable or at a Notion or whatever. And so it will just take years and years and years and years to figure out the best practices, or not, or at least months and quarters. And you don't really have that time as a company. So you can control your fate a lot better when you do outbound. Because you get feedback a lot more quickly from your customers, and it's exactly the right types of customers that you want to attract. The problem with product-led growth is you're like going very broad, random people are signing up, and you don't really know who to optimize for, because some of them are going to use it for like the pet project. Some of them are using it in an enterprise. Some of them are using it at a small startup. So now you're on the other side, and you're a product team, and now you're like, who am I building for here? So that has massive implications, because you can't really control the people you're selling into. If you're doing outbound, you can be a lot more targeted and be like, okay, I'm going to go for this industry first, this type of customer first, this type of persona first, etc. So be aware like of the implications, and especially if you are not good at it, if no one has ever done it before, it can create a lot of chaos. I would say.
And just to add to open source, one thing, same thing, right? Open source, a lot of people are using it. Is it relevant? So your product team really has a hard time. And if you look at the large open source companies, they have a lot of outbound teams, because what they essentially do is they call those companies, say, by the way, everybody's using us. You might want to have an enterprise license. And it doesn't happen automatically.
I mean, I have to say, all the examples you brought from product-led growth is all horizontal. So first of all, I think if you're doing vertical, B2B SaaS, there is no product-led growth. It's a myth. It's not going to work. You need to go the classical, outbound, really focused target audience. So because yes, it can work for an Airtable, can work for a Notion, for sure for Figma, because it's all Figma maybe the least, but it's still some kind of horizontal product.
They have a lot of salespeople as well, if you look at them.
Yeah, I know we are like customers.
Yeah.
So we have gone through the Figma acquisition process, and it's a great product, and that's from. Maybe we are mixing up sometimes really great product. That doesn't mean automatically that it is done with product-led growth.
Yeah.
So, but today people are setting that equal. If you have a great product, then it's product-led growth, but it's not. And in vertical SaaS, in B2B, this is a myth. It doesn't work.
It also has massive implications on the product, right? In terms of like you need to templatize, for example, a lot so people can get started and etc. It's not just like, oh, I buy this, I build this product, and then I'll choose the go-to-market strategy and I go with product-led growth. No. If you go with product-led growth, you need to make that decision first, and then build the product accordingly. And so it has massive implications. And what I see a lot of founders. The commercial strategy does not fit the product strategy. It's quite interesting. I'm like, the product strategy makes total sense. And then I ask them go-to-market questions. And I'm like, but the two don't go together. And I think that's what you need to understand, like where to start. Yep. You need to have a thesis at least going into the market. Okay, this is my go-to-market strategy. And then build the product accordingly and vice versa. And always question yourself, okay, does it still fit? Or am I changing the product in a way that actually I probably will also need to change the go-to-market accordingly? And I don't think a lot of people wear the two hats and get the two together. They are typically, lots of founders are strong at one and not the other.
Yeah, there can be that bifurcation between the two, and then I think it can also then lead to what are some of the decisions to make around bottoms up versus top down. Which is a topic for another day. But we have a few minutes left, so I wanted to maybe have some time for Q&A, and maybe catch a few. So I don't know if you could just raise your hand, and then we can have someone that can get to you.
Someone here in the back.
Yeah, hello. I don't know, maybe a question for all of you or whoever wants to answer it. How did you see the VC area or the VC market now compared to 5 years ago?
5 years ago is good. 5 years was still okay. 5 years was still okay. I think we're back to like 5 years ago, although we have too much money in the market with a lot of overvalued companies, which is not a bad thing per se, but we will have corrections still. The positive thing is we have a lot of capital and a lot of innovation, so that can be invested, and people have to take risks. That's part of our job. We just need some corrections, and we're still going through that when it comes to KPIs, when it comes to what's a great company, what's a big company. So we have trained a lot of people in the VC industry during a time when you could just throw stuff at the wall and it would stick, and some other crazy dude would come later and just throw more money at the company. I'm sorry, I'm exaggerating here, but it's not the right feedback loop. We didn't have good feedback loops.
Yeah, so I joined VC in 2015 and was a VC in like 2015 to end of 2018. Then left, was an angel, like was kind of an outsider looking in, and then went back into VC last year. And it's night and day how the market changed in Europe. As you say, like the people have been trained on very different things. It was all about speed. It was all about momentum-driven investing, like which company can get for $1 million ARR the quickest, even though it's completely unsustainable, etc. Right now, the market is completely split. I would say the top 0.5% of the founders can still raise at crazy valuations at pre-seed and seed. Not at Series A and Series B and beyond. Pre-seed and seed, there are pockets which are still absolutely crazy. Like pre-seed valuations of 20, 25 million post-money. And we're not talking about the next LLM. Those are more like a 250 post. But it's just like experienced founder starting a new business in a hot space is like 25 million post. Then you've got like 20% of the market where they can still raise. It's still a good market for them. They still get 3, 4, 5 term sheets at maybe 20% discount to like, or 30% discount to where it was a year ago, maybe 40% max. And then the rest of the market, even for pre-seed and seed, is basically dead. And people are doing extensions, maybe raising angel rounds, etc. But there is really kind of a really weird situation right now where like the market is a little bit all over and there is pockets of craziness. But in general, people are like waiting and seeing, which is also partly the case because a lot of the funds that are maybe raising right now, fund generation 2 or 3 or 4, the seed funds that do not really have the very strong relationships with the LPs yet, where like some of their portfolio is scrambling. They do not have so-called DPI yet, so they haven't really distributed any of the returns to the LPs yet. The LPs are very, very, very cautious, and they basically need to tell or show the LPs how disciplined they are right now. And so they are like overreacting, and they're going to the other extreme. So one of the things to look at right now is like which fund just raised, because they might be willing to take a little bit more risk than others that are in fundraising mode. Which fund has probably been around for a little bit longer and has like very, very strong LP relationships. And those are a bit more risk-loving right now in the market than other funds who are in fundraising mode, for example, which are very risk-averse as we speak.
Yeah, and I think probably for that reason, that's why you've seen, outside of generative AI, which is kind of taken over headlines, that actually you see, because investors want that consistency, or LPs are looking for some of that consistency, B2B SaaS is the darling once again. So
I would just say, I can sum it up, I think, deal with lower multiples and have a high efficiency, and then you will still find, as I said, there's a lot of money in the market, but you need to have those, deal with the realistic multiples, and show efficiency, and a cash burning machine, you will find no investment these days.
All right, so coming up on time, but want to thank everyone for being here. Obviously, our panel members. Some great discussion around go-to-market. I think summarize product is king, and making sure that you continue to invest deeply there. And also that there is no silver bullet, but it's going to be that continued iterative process, and making sure that you're having the right mechanisms in place from an internal perspective to kind of reduce some of that friction in that pursuit to your go-to-market strategy. Thanks everyone, and have a great AWS Summit.
Thank you. Thanks for the invitation.